Hi, I hope you're well, and I hope that you can hear me now. So I am very careful with what I'm doing now, but I would like to hear if you could please comment on whether you can hear this loud and clear. That would be nice. Can you hear me loud and clear? That is brilliant. Thank you so much, everybody. It's lovely. Super. Now, what we're going to do now is we're going to have a latency test. Just a very quick latency test. I got 3 seconds latency. That's brilliant. Thank you so much, guys, from Hungary, from India, from London. I think I saw someone from Australia, Finland. Hello, Finland. I hope you're well. There's a guy in London who's 3 seconds ahead. That could become incredibly profitable for all of us. There's Mustafa from Kuwait. We got James from North Korea. James, should I believe that? We got Belgium. I didn't think you were allowed to do CFDs in Belgium. Amsterdam, Spain, Canada. Wow. Hello, Ericsson from Canada. Sunny Glasgow. Now that is a contradiction. Glasgow and sunny does not go together. Scotland and sunny does not go together. If you'd said pissing down in Scotland, I would have believed you. But now I know you're just lying. What else we got? We got Jamaica, South Africa, India, Ukraine. Boom. Right, Denmark. Okay, good stuff. Philippines, Boston, Copenhagen Airport, Luxembourg. Namaste from India. Peru. All right, Franco, Zurich, Italy. Wow, you guys really are from everywhere. So, shall we get busy? All right, let's get to it. Let's just do a quick overview of what's going on. Let's take a look at the Dow. At the open, we had a double bottom. No, I want to show you what happened during the morning. We started off at 34,600. We had a big decline, double bottom at the open, big push up. Now we're developing an inside bar on a 30-minute chart. Going to the 15-minute chart, 10-minute chart, and then finally a 5-minute chart. And as you may well be aware of, tomorrow is non-farm payroll. Let me show you. Forex Factory. So you go to Forex Factory and there you see, how do I get tomorrow? I will get tomorrow here. So here we go. So tomorrow we got non-farm payroll, which is labeled as a red flag. So go to Forex Factory if you want a good, decent calendar. And maybe there is some position squaring or some option hedging ahead of that. The US has been open for an hour and 15 minutes. To me, it looks like a bull channel up. Got a little bit of a retracement going on. So we got to be patient. Let's wait for a buy setup. Trying to honor this push up here. Of course, there's also always the chance that we're headed back down again. Whilst we're doing that, let's look at the the DAX. The DAX had an incredibly strong push up from 1 o'clock. And it looks to me as if what you need to do in the DAX is to be a buyer on retracements. So I could imagine that I would want to be a buyer around 15,600. And then I would have a stop loss around 15,560, 70. And finally got the FTSE. I currently have a position in the FTSE. I've taken a lot of it off. I was long 300 a point and got in at 17,014. And let me just see. Not bad. The low of the day was 7,012.4. I bought here. Please forgive me that I didn't do it in the room, but in the Telegram channel. But at that point, I had left the channel to go and exercise. And I got out around here just before the US Open, but I kept some of it and that's what I got. So that's what we got to work with. Now let's see the Nasdaq. Nasdaq looks a little weaker. But this is a 10-minute chart, so let's go to a 5-minute chart. I had a question earlier on that I thought I would like to answer. Someone asked me, when a market approaches a support area or a resistance area, do you go in and do you buy immediately, or do you sell short immediately, or do you wait for confirmation? And I couldn't help but think, is this question addressed to me or to the person himself? Because I think that's a question of your own patience, your own temper. You see, if you buy support and the market immediately bounces, as it didn't do today, and I lost 20 points. If I do that, of course, afterwards I'm thinking, why didn't I wait for confirmation? Why didn't I let the market test this area of support? But I want to turn the coin on you for a second here, because technical analysis is quite easy to teach. What it really boils down to is, well, how do I want to approach technical analysis? Because you could have said, well, what if you didn't wait? And what if it did one of those V reversals? And all of a sudden, you should have bought at 50 and now it is at 70. How do you feel about having to pay 20 points more than you originally could have done? So the question is quite clear-cut. At that point of entry where the market hits an old support area, you have to decide for yourself, if I go in right now, the risk is probably very clearly defined. I can enter, I can put a stop loss, story over. But if I wait for confirmation, then I don't know how much further up I have to buy in. And it may be that I have to buy in 20 points more, but the flip side is also I may actually save myself the trade altogether. It may be that, like today, if I had waited for confirmation, I probably wouldn't have entered the trade, because I would have thought, well, it's actually breaking below this support area, so maybe I shouldn't actually be in this trade at all. But do you see the trade-off? There's constant trade-off between risk that we take and our reward, constantly. So if I wait for confirmation, I may have to have a bigger stop loss. But then you argue, well, then I could just use smaller stake size. Fair enough, but if you use smaller stake size, you won't make as much. I hope that I can somehow get this across to everybody. And I'm sure many of you, most of you probably already get this, is that this is a constant flux between, well, how much do I want to risk? And how soon do I want to get in? Yeah. Okay. So let's get to it. Because I suspect that thing that we were waiting for has actually just materialized before our very eyes. So I argued that the DAX was in an area of support. We want to be a buyer, but I didn't because I was busy yapping away. So let's see if we can find an entry. You can always get another entry. At least that's what I hope. I'm just gonna check that you guys are okay, that everything is all right. Yeah, so there's a guy here called Falana. He's kind of saying it correctly. He says react or anticipate. That's always the issue, isn't it? Always. So Matthias is saying, how do you deal with uncertainty? Well, look, my friend, we are uncertainty peddlers. You and I and everyone else, we are actually in the game of embracing uncertainty. There's no two ways about it. I am aware that the market might just be running a little bit, so now I can do both. But I just want to talk to you as well, because I hate talking to you while you're watching the screen. You can watch the screen on your own PC, but the Nasdaq is really running away. So if you have a hard time dealing with uncertainty, then I suggest you take a pause from trading, do a lot of visualization, a lot of mental, shall I say, exercises to get used to it. And then when you start trading again, start off with a very, very specific game plan. I'm just going to say, well, I'm going to bet one contract at a time or 5 lots at a time. I'm going to stick to that until I really get the rhythm of embracing uncertainty, getting control of myself, working the weak sides out of me, the weak side being the weaknesses, my impatience, my fear of letting a profit turn into a break even or worse. Now, today I got started very late because, well, you saw the comment from my IT engineer. He called me a plonker. He said that I wasn't fit for purpose for handling a PC. And then he drew idiot on my screen. It's all good laugh, of course. He's a good friend of mine, naturally. But yeah. So that's what's going on. So let's get back to the chart. Because I really want to be a buyer of the DAX. I really want to be a buyer of the FTSE. It's just a question of, do you want to bet on a breakout level here? Do you want to bet on a breakout, or do you want to bet on this being resistance? See, I personally think with a bar like this in the Dow, we can just zoom out a little bit for the bigger picture, but something like this looks like it's ripe for moving higher. But I wouldn't quite like to be a buyer of resistance. We want to be sellers of resistance and buyer of support. So we just need a little bit more patience in the FTSE. Okay, so a guy called Dark Horse, which is, by the way, a brilliant name, Dark Horse, he asked me to talk about the IBEX. And I would really like to do that because I think the IBEX could be an interesting index for us to trade together. Why? Well, and I may need to collect a bit more information to prove this case to you. The downside is that the spread is 4 points. Although we could all of us could just contact TD365 and saying, hey, Why does it have to be 4 points? Couldn't we knock it down to 2 points or 1 point? But what I like about what I've seen so far is that the IBEX seems to have some very clear signals. So if I take a random day, let's take this day here today. Sorry, a day or two ago. Very frequently, the IBEX will play on a breakout level very, very well. What I mean by that, and Dark Horse, I owe you a much better explanation that you're going to get in the next couple of minutes. But if we deployed a simple breakout strategy in the IBEX, very often we would catch some very decent trends. And I spoke to you about this yesterday with Capel's book, the breakout book. Let me show you another day. Let's take a difficult day. This one here. So if you were a seller down here, yeah, obviously you would be sweating quite a lot of the day. That I don't dispute at all. No one really likes to get caught up in a sideways range day. But if you were a seller down here, eventually you would have a good trade. So what I want to do is I want to do some more preparation on the IBEX and then present it to you here in the group. Now the thing about what you need to be mindful of is that the broker here that I use, they only offer the IBEX from the open until the close, so they don't have an overnight service. So you got to make sure that you are out of the trade by the time we get to towards the end of the day. So Dark Horse, I am absolutely conscious that I haven't answered that question fully. I barely scratched the surface. All right. Me and my big mouth. Roll back and I said I want to be a buyer down here, and then I got it talking. Silly Billy. See? That's what happens when you get me talking. Gotta learn to be quiet. Yes, Aaron. Such is the nature of price action in that the setups will be the same, but you are addressing it from a different time perspective. See, the advantage of streaming is I can say, without having to post in the channel, I can just say, we probably want to be a buyers around here. So that's a good thing. See, I still want to add to my long position. Let's get rid of Spain for today. And let's take a look at DAX on a 15-minute chart, the big picture. We started the day here. This is a very strong day. God, I feel like I missed the boat 15 minutes ago in the DAX. I so still want to buy this. You're welcome, Anil. I think I am using a Vivaldi browser, or am I using a... Anyway, something to look into. Right now I gotta look into why am I not on board this. Well, I think we know the answer because I'm a chit-chatter. Just want to point something out to you. Take a look at this. This is Nasdaq last night, 3 hours before the close. And this is Nasdaq now. I want to sell short the Nasdaq here a little bit at 05. And I'm gonna have a stop loss of 15 points. I haven't posted this in Telegram because I can't find my console right now, so this is gonna be just in YouTube. Here's my trade. It's right there. There it is, and there it is. And what I've done here is I've basically sold this area here. It's one of those trades, small risk, probably work really quick or not work at all, because we got 3 very strong bull bars ahead. And when you look at what other indices are doing, you'll be thinking, okay, why shouldn't Nasdaq benefit from this? But right now, it seems to be struggling. So this is an example of how we hang on. This is an example of what technical analysis is really all about. We're trying to find levels where we want to be buyers or sellers, and then we swing the bat, and here it is, US tech, and then we just hope for the best. Meantime, let's look at what's going on in the other indices. We got FTSE making new afternoon highs, 20 minutes to that market is closing. We got Wall Street, got a very strong bull bar. We got the DAX that they missed this setup here. I think we've covered that. And then we got Nasdaq. And so if we wanted to, we could say, okay, well, I have a handful of points of profits here. Now, Nasdaq does move quick. But here it is. It's kind of live. It's live trading, isn't it? It's just, oh, there's resistance with sell. Didn't feel particularly nice that the market moved against us by a handful of points, but now we'll see what happens. Maybe we get stopped out. If we get stopped out, doesn't make us bad traders. We follow the game plan, move on to the next one. Currently we are about 10 points in profit. We risked 15 points. I keep saying we, as if you, I don't know whether you took this trade. It's immaterial to me whether you took it or not, but I took the trade, and so the rhythm goes. You take the trades, you get stopped out or in at a profit, and then you manage the position, and on it goes. And so I don't want you to say, oh wow, what a good trader, because he's in profit. And on the flip side, I don't want you to say, oh my god, what a crap trader, because this position is losing him. What we're doing here is repeating the same behavior over and over. That's our jobs. And this trade here, hey, right now it's looking okay, but it may not look okay in a couple of minutes. So what could we do? Well, we can manage the position. Currently, I'm a couple of $1,000 in profit, so we can manage the position. We can say, well, I'll move the stop loss to, I'll swap to a 1 minute chart, and I say, well, it managed to get all the way up to 13. So maybe I'll move my stop loss up to down to 15. So therefore, I would have cut my stop loss risk by 5 points. I'm just looking at some of the questions that are coming in. Can you explain, someone is asking me, can you explain your strategy? Yeah, that's kind of what I'm doing right now. Blue Eye says, I notice you ignore the S&P 500. I don't ignore anything. Trade again once asked me, can you explain your strategy? I am. Here we are. How do you decide whether to scalp or let a stock run? Don't know. It always looks so easy afterwards, doesn't it? Always looks so easy afterwards. That's why this is a mental game. When I sold short, be honest with me, just level with me here. When I sold short that position 5 minutes ago, and the market began to move against me. Now be honest with yourself. Did you not think, I ain't selling short here, this is going up? What an idiot that Tom is. Now I'm not portraying myself to be something I'm not. All I'm saying is that every single one of us at that moment of execution, you just got to be certain of what you're doing, and you got to have a game plan for how to manage your emotions. And then that's all you can do. Control the risk, hope for the best. There's nothing wrong with hoping once the trade is in and you have put your stop loss. What else can you do? Tell me, am I using the word hope in a wrong context? Because I don't think I am. I think I'm showing you this in real time how, and I'm basically just putting out to the whole world what we all feeling. This flutter of excitement when a trade is going our way, and this I wouldn't call it anxiety, but you're wondering, is it gonna work out this time? Because of course we all want all our trades to work. Every single one of them. It's natural, isn't it? I don't understand a lot of the questions that you're asking me. Why are you asking me, why did I put 20 point stop loss? What would you like me to have done? 19 point stop loss? 21? use a Fibonacci number. It's just an arbitrary number. You guys are reading way too much into this. You are overthinking the whole process. You think that trading can be solved using technical analysis? It can't. It's got to come from in here, man. You have got to learn to immunize whatever impulses your mind is sending you. Take a look at this. Here we are. Those of you who are not short right now, you are kicking yourself for not being short. You're thinking, why didn't I short there? I could have been up $4,000 or $5,000 or whatever your trade size is, or $4 or $5 if you're trading. But that's my point, is that at that moment when I executed that trade, do you think I knew what was going to happen? Of course not. It's stupid to think that I somehow possess knowledge of the future. I don't. All you can do, all you can hope to do as a trader is to take one trade after the other. And again, I will tell you this. You would have thought I was a right old idiot and a plunker and many other horrible words if that trade hadn't worked out. You would have said to me, of course it was absolutely clear that that trade was never going to work out. There were 3 strong bull bars. Of course it was going to zoom higher. And all I can say to you is afterwards is, maybe you were right, but I swung the bat and I hoped for the best. And I did the one thing that I could. I controlled my risk. And so here we are. We are now in a 30-point winner. Yeah, it's not a 5-point winner. It's a 30-point winner. And our stop loss was 15 points. What else is there to trading than this? So let's take some profit. Why? Well, because that's our job. That's a trade. Whether you made $5 or $5,000 or $500, doesn't matter. You should be happy that you followed a game plan and you had the nerve to execute it at a point where you must have been thinking, that's a very strong move up. I bet you it's not going to honor this stop loss. You know what? We got lucky. It's just the way it is. And we've taken profit. Maybe I've taken profit too soon. Who knows? The sad truth is that when we get involved in trading, we think that by going and attending a weekend course with whoever we attend a weekend course with, we think, oh my God, that guy there, he's going to teach me everything there is to know about trading. And come Monday morning, I'm going to sit down in front of my new PC with my just well-funded account, and I am going to be the shits. I am going to absolutely decimate this market, and I'm gonna make so much money that I wouldn't know whether to expand my house or buy a new house so I can house all my new Ferraris and Porsches. And then Monday morning said, no wait, then you go through Saturday and you're thinking, I would have seen that. And then Sunday you just get confirmed and reaffirmed the thinking, oh my God, I would have bought there, I would have sold short there. Wow, I don't even know what to do with all the money I'm going to make. I'm going to start making plans on how to give it away as well. I want to be like a Bill Gates. And then come Monday morning, you all sit there and all of a sudden you get this flutter of excitement and you're thinking, I haven't traded. And it's 20 minutes past 8 and I still haven't traded. I better find something to do. Yeah. And that's when the problems begin. See, I think that people like Edwards and McGee that wrote technical analysis of stock market trends, but they weren't traders. They were journalists. And that is not criticism at all. But what Edwards and McGee's book is all about is support and resistance and trend lines. Well, it's taken me a long time to get to this point in my life where I am overtly cynical about everything that I read and everything that I am being told to follow. Because I have a very strong feeling that there's very few people who actually truly deserve to teach. You know, you look at the guys like Greg Secker and his videos, the 5-3-1, you know, 5 currency pairs. I don't know. It's just like you have this tendency to want to almost carve it up into nice little neat packets and then serve it to a gullible audience and saying, "Here, there you go. And by the way, now you can pay £2,000 for a weekend course." But the market just doesn't work like that. You have an 8-hour workday. I mean, let me give you a perfect metaphor for what we're doing. Imagine that you're standing on the mound with your baseball bat, and you will have an opportunity to strike whenever you want to. The balls keep coming, but you're waiting for that one that you actually like the look of, the one where you think, I'm going to take a stab at that. The problem is you being asked to stand at that mount for 8 hours a day. And that's an enormous toll on your patience, because your mind wants to be active. So you most certainly need to develop a filter, a very, very strong filter on when you want to take your trades and what specifically you're looking for. And the problem with, and please, Greg Secker, if you are watching this is actually no offense to you. I'm being a little bit harsh to you because I know you want to do a good job as well, and fair play to you for that. And Greg, by the way, I have to tell you this. When I read that story, how you went to court because you got yourself into a little bit of a mess when a girl showed her affection for you in that car, I didn't know whether to laugh out loud or be jealous, but hey, fair play, man. Fair play. I guess my point here is that when an educator comes on board, they will be aloof to tell you all the things that I'm telling you. They will say, well, you know, it's really easy. You wait for this setup and then bang, away you go. And then untold millions are going to roll into the account. But I think all of you that are present here today will know that patience is probably, as the saying goes, is a virtue. And it takes a hell of a lot more than just being able to decipher a few charts here and there, and whether you use Bollinger Bands or Keltner channels and the likes. There is a hell of a lot more to trading than that. And I'm not particularly a crusader against seminar providers, not at all. I think I gave Anton Krill a bit of a hard time as well. And hey, Anton may deserve it, he may not deserve it. I guess my point here is that people that are charging $2,000, $3,000, $4,000 for their courses probably also should spend a larger proportion of the course telling people what to expect once they get going. Because the advantage of being an educator is that you just show all the beautiful examples. But as I showed you a couple of days ago here on YouTube, there are 12 there's 12 5-minute bars on every single hour, and I'm being made to sit through 8 hours of that. Now 8 times 12, what's that? That is 96. So that's 96 5-minute bars is in an 8-hour session. There's a lot of time to spend to get into doubt. I don't think that they are scammers I think they just want to portray themselves as people in the know. So you worked for Goldman Sachs, so per definition, you know what you're talking about. And you have to assume that an established house like Goldman Sachs wouldn't hire anyone but the very, very best. I mean, they have the cream of the crop. They can take whoever they want. Everybody wants to work for them. So someone who has to their credentials on their CV that they work for Goldman Sachs, I'm sure actually is worth their pinch of salt. And whether I would spend $2,000, $3,000, $4,000 on them teaching me how to trade or not, I'm not so sure, because I think trading can be taught very quickly. I think it's very quick to teach you the most basics and advanced setups, and it really is. And if you're in doubt, then just take get the free course from Al Brooks, and just get a sense of how quickly it is you can actually learn these patterns, how quickly you can learn these setups. Dow is still running strong. Yes, it sure is. But there you go. It's not like we're going to go home empty-handed either, is it? We had a good trade. All done live. Alright guys. I got started pretty late today, and I'm afraid I'm not able to stream any longer today. I don't know why I'm doing this. It's fucking stressful to trade live in front of so many people, and at the same time running your own positions. I must have a desire for self-punishment. Slava is saying, you just always tell that many people sell too soon, but how can you sell without reverse psi? How does it work? Thank you for answering. I'm not sure what you mean, Slava. Sorry, mate. Okay, there's quite a lot of adulation. Can you please stop saying you love me? I met Mark Douglas. I'll tell you a story. I was invited for dinner at Mark Douglas's house. And I'll tell you this. That man lived his words. He is a man who passed on way too soon. He was incredibly sensitive. Not sensitive, and that's me translating it. Sorry, my mother tongue is not English. He was an incredibly, what's the word? In Danish we say stille. He was a very quiet man. He was a very quiet man, unassuming. But when he spoke, he was like he just opened a window into your soul, and with very few words and a very few questions, he could show you what your weaknesses were. And I really enjoyed that. And here's the thing that I would like to pass on here. Mark Douglas doesn't have to be a super trader that trades hundreds of lots every single time in order for us to teach us something. And that evening that I spent with Mark and his wife Paula and Larry Pesavento, it's just one of the most precious moments in my life. Mark invited me up to his roof, and they lived in, I think it was in Scottsdale, Arizona. And he just sort of lived out in the outskirts, and you could sort of see the desert. And he was telling me about that out there were wild bees, and if you happen to come across a hornet of wild bees, you better fucking run for your life. And he was just talking about how he lived like he was in the wilderness in the wild, wild west. And he was proud. He was proud of his family. He was proud of his house. He was proud of his vocation. Yeah, he was a really good man. He sadly left us way too soon. What a shame. And I saw some of his trading, and I didn't think that he didn't give me the impression of that Mark himself was one of those traders that were trading hundreds and hundreds of lots. But he traded, and he lived what he taught, and I like that. The same with Larry Pesavento, same with Bryce Gilmore, and now most recently with Al Brooks. I admire these guys because for them it's not so much how much they can hype themselves up on YouTube and on adverts driving a Lamborghini or flying and trading from a helicopter. It's kind of absurd because that's really not what trading is all about. And I may be stepping on some toes here, but I don't want to be taught by someone who think that it's great that I see that he drives a Lamborghini and flies a helicopter. I couldn't give a fuck what you drive, and I don't care. Well, is it a symbol of your wealth? You done well? Well, you could have done well from selling seminars, right? Or you could have inherited a truckload of money, and then it doesn't make much sense to me. I want someone who can pave the way and show me in real time, show with no bullshit, just say, this is how it works. And it doesn't feel very comfortable when you are in a losing trade. It just doesn't. And no matter how many times that you go through it, you think, well, shit, am I ever going to get used to the feeling that I get when I'm losing? And probably not, because it doesn't feel very nice. And then at the same time, my personal problem when I'm in a winning trade, I have a tendency that I tend to get very, very aggressive. So if I'm bought something at, say, 30 and it goes to 40, I have a tendency I'll buy more at 40 or 45 because I'm thinking it's probably going to go to 80 or 90. I want to be on board. What was the most valuable thing Mark Douglas taught me? Humility. And Larry Pesavento? Humility. Straight as. Al Brooks? Price action. Humility. All right. You take care. See you soon.